Home sales rose for the third consecutive month in March, but they were off the pace set earlier in the year. Braden here from Royal LePage, Little Oak Realty. Welcome to my housing market update. And as you can see, home sales did rise by about 13% month over month, but they couldn't match the pace that was established in January and February. And in fact, when we compared it to the 10-year average, they're down by about 31%. So you can see there is a sizable contingent of buyers that is simply missing from this market. And of course, the cost of living is starting to take its toll. High interest rates are starting to take their toll, and people are certainly pulling back, and they're in what I would say is a bit of a holding pattern at the moment. New listings were 8% up month over month, down 12% when compared to the 10-year average. So similarly, we are still seeing sellers pulling back as well. They want to wait for better market conditions because they know that when interest rates drop, we're going to see the market pick up, and that seems to be undoubtedly the case. The thing that what we can't be sure of is when the interest rate cuts are going to take place. Inventory levels were up by about 5% month over month, and this March was actually the highest inventory of March in the past 5 years. So there is something to be said for the amount of inventory that we have on the market right now. However, once again, when compared to the 10-year average, you can see we're still a little bit below. We don't have the normal amount of inventory on the market right now, and it certainly still does feel that way. So here in Canada, are we going to have a rate cut in June? It seems like it could be the case. The last inflation print seemed to indicate, we had core inflation come down a little bit, and that is the bank's preferred measure of inflation. So that does leave the door open for a rate cut at the next meeting. In the United States, however, though, they've had 3 consecutive inflation prints that were higher than expected, and that is telling us that we could have the earliest rate cut in September. So what may happen is we may have the Bank of Canada cut rates first, and there's a lot of speculation that this could cause a drop in the Canadian dollar, which is going to affect our exports and our economy as a whole. So a really interesting situation, and definitely one to keep tabs on. Prices as well, they were up in March by a not an insignificant amount, by about 1.5–2% across the entire Fraser Valley. However, I think this trend is going to break pretty soon. We could see prices fall slightly in April, or maybe they will stabilize and stay flat, but that remains to be seen at the next stats release and my next market update. Anyways, thanks so much for watching, and I hope you tune in next time. Bye now.